Good day, I'm Chartered, your accounting tutor. It is a continuation from allowances for expected credit losses. Mind you, I've already treated how the allowances are being handled in the adjustment, if they are given in the trial balance and in the additional information. I promise you also to present it in a ledger form, how they are presented in the ledger, so that they will be captured in the adjusted trial balance, so that they'll be included in the adjusted trial balance. So first, you are going to open an account called Allowances for Credit Losses account. Allowances for Credit Losses account. Then in the debit side, you are going to present the new allowance, the allowance that is created new in the additional information or at the end of accounting period. So by way of working, I'm using the first illustration given, whereby the allowances was calculated 20% and the amount was 4,000. Look at the 4,000 there, you will debit it in the allowance for credit losses. So the initial allowance, which was brought forward or which was already found in the trial balance, will be taken in the credit side. So in the credit side. So this is the one created new, and this is the one that was in the trial balance during the year or brought forward in the previous year, as the case may be. So in this case, if we deduct 2,000 from 4,000, what will be charged in the profit and loss account will be 2,000. Mind you, this is an increase, and I told you that if it's an increase, it will be used as an operating expenses, and that account is now balanced. That is the initial one, the new one found in the account calculated at 20% based on the previous, based on the illustrator I'm given. You found 4,000. 4,000, then I said 2,000 and 4,000 get 2,000, which we want to charge in profit and loss statement. Coming down here, you know that in every transaction there must be a corresponding entry. This one was already brought forward, so there's nothing like corresponding entry, but this is the one that is created new, so it must have a corresponding entry. And the corresponding entry will take you to open a new allowance for credit losses. So the new allowance for credit losses, the corresponding entry here will be found in the credit side. This is debited and this will be credited. And this is the new one that has been created, which will serve as a balance carried out. Meaning at the year end, the new allowance that is now in the books of account for the business is no more 2,000 that's in the trial balance, but the new one is 4,000, which will serve as a balance brought down, which will be taken forward to the new adjusted trial balance or can be considered in next year as a new allowance. Initial was 2,000 and the new one is 4,000. You must demonstrate that this is the one that is brought down in the current year. So let's see how the allowance is handled in the financial statement, which is the most important. So here we are saying that in the statement of profit or loss extract, if you go there, mind you, under operating expenses, I'm still repeating, the increase in allowance, if you calculate and there's an increase in allowance, there's a situation whereby you are making comparison from the initial allowance given in the trial balance and the one in the additional information, and you find the difference, and the difference ought to be an increase. Mind you, it is that increase that will be treated as an operating expenses. And look at it here, you are putting it as 2,000, which is an increase based on my illustration from the explanation in adjustment 1 under adjustments on allowances. So coming here too, I want to say explain further. If it's an increase, it should be treated as an operating expenses. But if this is a decrease, as in the fourth illustration explained in the allowances in additional information on different scenario, if it is a decrease, please don't treat it as an operating expenses. Add it to gross profit, which is an other income. Increase should be used as expenses. Decrease should be added to gross profit, which is other income. That is the explanation. Anything short of that, it is not correct. Then let's look at how it is treated in statement of financial position. Coming to statement of financial position, allowances is not standing on its own. But what happened is that it's being deducted from account receivable. Mind you, the allowances are given in respect of account receivable. So it is a deduction, that is a reduction in the amount expected to be collected from customers. So you come and deduct it. You know that account receivable is a current asset. So coming there, the allowances will reduce the value that the business expected to receive from customers. So coming under current assets, where account receivable is found, you now say the account receivable is 20,000. Why the new allowance? This is where I still want to make emphasis. Mind you, I was telling you that we have allowances. We have allowances, the one found in the trial balance. We have another one found in additional information. We also find a difference. We have a difference. The difference can either be an increase, which is an operating expenses, or a decrease, which is an income. But coming to statement of financial position, please get me right. The one that is deducted from account receivable is only the one that is found in additional information. That is the new that is created. Whether the new is a higher amount or is a lesser amount, all you are going to pick to deduct from account receivable is only the one in additional information. Mind you, not the difference, not the one in the trial balance, but the one that is created new at the end of the accounting period. That is the one you are going to deduct from account receivable in statement of financial position. So look at it here. The initial was 2,000. The initial was 2,000. The difference was 2,000 as an operating expenses. But the one we are going to deduct from account receivable is only the new, which was calculated at 20%, and we arrived at 4,000. It is 4,000 that we subtracted from 20,000 to get 16,000. So this is the amount that we use as account receivable at the end of the year. So if you do not deduct this allowance from the account receivable, your account will never balance. Meaning the business has set aside 4,000 that customer will not be able to pay out of the 20,000 available at the end of the period. So you must do the adjustment before the account will balance. So this is the full end of allowances for credit losses, how it is handled in the financial statement, how it's worked out in all the adjustment based on the categories or based on the types that you see in any question or in the real life situation. So don't forget to follow my video, because in the next adjustment I will be looking at depreciation, which is another area that looks a bit complex as that of the allowances for credit losses. Don't forget to follow up my video, share and comment. Any question, put it in the comment section. I'll come back to address it. I remain Chartered, your accounting tutor.